Today is Sunday, January 7th, 2018. This weekend market recap, Dow Jones 30 index. Now, first start off with, I did a three-part presentation near the end of last year on my 2018 forecast for the Dow Jones, which involves S&P and pretty much all markets, called Tunnel Through the Air, and what I would think is going to happen and possible reversal points and dates to look out for. So on this recap, we'll be looking at those dates because there's a couple important dates in January in regards to the cycles and important timing points on the monthly chart here. So as we know, though, the first few days of the year, the markets have just literally taken off again. You know, we've had the Dow that's blown past 25,000, and there's a very important, on the monthly chart here, there's a very important Gann timing angle which starts way back from, which is measured from the high of February 2000 up until this point. Now, we can see with these angles, so we have the one it's nearing is the 1/3. We had the 1/4, this blue one, and we had the 1/8. And first of all, if we just focus and zoom in a bit on this, if you can see this 1/8 angle there, we can see the high of October 2007 before we had the GFC. The price moved from the low all the way back up and met that 1/8 angle and was a confirmed rejection. That also tied in with a 7.5 year timing cycle, which is called the 90 lutation moon cycle, which I touched on in the presentation I did. So that proved valid. We had the GFC, the bear market. August 2013, it came up, momentarily met resistance, but because of all the central bank injecting money into the system, it broke past that. And then when we had the bit of the correction and the late panic and the panic through 2015, early 16, it came back, met that angle, found support, broke up above it. Now the thing is, if the price of the Dow Jones had have confirmed break below that angle, we would have no doubt moved into a bear market. But because of the fact that it didn't, we've actually gone the other way. Which leads me to moving forward. Here we have the 1/4 angle, where June 2017, it was held with a bit of minor resistance, but because the momentum's been so strong, it didn't hold for that long and busted through. So here we are, early 2018. We have the Dow Jones on the monthly at 2000. Friday's close was 25,200 20 odd points, I believe. And I'm keeping an eye on this 1/3 timing angle, which equates to, I'll just zoom in there a bit. Sorry. Back there. Which equates to 25,540 area, and also it intersects this timing angle. I'm actually more looking towards 25,700 area, 704 to be precise, which intersects the horizontal 161 Fibonacci expansion, which is measurement from the low 2000, from the low of 2009 to the high of 2015. Because as we can see, this Fibonacci measurement is played with precision. When the Dow Jones hit the 123 at 21,165, it was met with resistance. But because the momentum of the market was strong, it busted through. Ultimately, the 161, beyond that, we have to, as far as horizontal, the next measurement of that would be the 261 at 37,000. Given what's going to happen this year with inflation, interest rates picking up, central banks slowly draining the liquidity, I highly doubt that we'll see that 261 at 37,000 get hit. Not in this cycle anyway. So what does this tell me? Secondly to that, this move, once the price broke the 123, this move, well, you can even measure it before it. Have a look at the what I call the angles of the moving averages, the 5, the 10, the 20, and so forth, with the price action. We've gone pretty much near parabolic. Now, some in the media saying, this is just the start of maybe a blow-off top phase, I believe is completely not true. Clearly they don't understand and what defines technically a blow-off phase in a market. And if you go on Investopedia and look at the definition, a blow-off phase resembles a near parabolic move on a price of an instrument, whether it's an index, a commodity, a stock, or so forth. So if I was to measure this on an angle, say from this point, we've got a 65% degree of angle, which is near, it's getting, obviously it's never going to be 90%, but if we measure it in terms of, we have a look at this one, 40, and this is typical of what happens when markets go into extreme moves. We had a bull market that was trending up on an angle of about 40-45 degrees, which is a common Gann angle. Now we've gone to the extreme 60-67 angle. So this has been in a blow-off top mode for many months, and it looks like it's nearing its extreme point, which tells me that we're possibly looking at a near top in in early January, which leads me to, if I just open this up, leads me to my forecast of, if I just forward on this date, as I noted in my presentation, we have a conjunction of Mercury and Saturn, and we have the Sun in the same house, which is a negative aspect towards Uranus, and this occurs on Sunday the 14th. So we could either get the top this Friday. I'd be looking at January 12th, which could occur, or the following Monday, which would be the 15th. And these are also critical, Mercury being a critical degrees, which is a hard aspect. So all signs pointing to me that we could, once we get near this 25,704 in this 1/3 Gann angle, we could see a pullback. Whether it's the market top, we have to wait and see. But considering how far the price has stretched from the 5 MA, we could at least see a pullback towards a 5 MA. Obviously, the 5 moving average is going to, even though if we do get a pullback, it's going to continue to move up. So we could see a pullback towards 23,500 area. Just have to wait and see how this plays out. But initially, that'd be my target, and we'll see what happens from there.